Welcome to another video about Forex risk management. It's one of those videos that came to be because of questions I receive from viewers. I think 70% is about the best entry. It's never the question about the best exit. So what's an entry without an exit? Think about that. Also, I get a lot of questions about technical analysis and where to get in and get out, to pinpoint those levels. Well, if you try to pinpoint levels, then you're in the wrong business. It's not about this. That's not what trading is. Also, I get why people ask those questions, because if I look at Instagram and I see all those accounts of people posting their winners and posting I told you so and posting before and after, it really screws up this business and this market, because that is not at all what trading is. Risk management indeed is very important, and I was happy to see someone asking about risk management in one of the comments last week. So here we go. Before we get into that, here is the disclaimer. As always, make sure you understand what you're getting into and what you're doing. It's not a get-rich-quick scheme. It is definitely a serious business, and if you like what I'm doing, please like, subscribe, comment, and also share. It really helps me help you. So let's get to the chart. Here we go. This is the the euro against the Swiss franc. One of my favorite charts. Why? Because it has these great and clean moves to the downside, a correction, a move, a correction, a move, a correction, a move. So I really like this market. I made a lot of money in this up move over here. Where was it? Yes, this was this breakout. I did not trade. It's too aggressive, but this slow and going upward moving. This was just getting in and taking profits, getting out again. As you can see, if you connect this, it's a really well formed channel. Great period for me to be trading. Okay, let's get back to the current market, where we also had great consolidations, great trending phases, corrections, and trending phases again. So that being said, risk management. Yes, let's go to the 4 hour to really get into some real trades here. Okay, trend lines. Let's point out the obvious. This is definitely the upside. This is definitely a trend line from this side out, and we are also have ourselves something like this on the lower side. We have a double bottom in place at the moment, so let's see what price will do from here on out. Make sure you get that idea of double bottoms, triple bottoms, etc. But we are here to look at the 4 hour chart because we want to make some money in trading. Now this is overall a bearish market. This is a down move. This is very obvious. Let's say you this consolidation was over, we started to move lower, and you got in at one of those pullbacks into this area over here. Probably, if you want to do it the way you should, this was the best area to get into a trade. This trend line, of course, just got it wasn't here yet until we had this sharp move moving into a new territory, forming a new staircase. Sometimes when you put on information like this live with people you know, people that live nearby, they are looking at me like, you gotta be kidding me. Is this really, is this serious what you're showing me right here? Is this how obvious price is moving? Yes, it is. And there are a couple of ways to trade this. I want to get in a quick idea before we get into the risk management part, because we are going down. I prefer to trade to the downside because that's the overall trend. So every pullback I get, or every move that's coming into a trend line or back into a resistance level in this case, is a potential entry for me. Okay. Well, sometimes it happens a couple of times, sometimes it happens just once. The ultimate thing is you want to always, in this case, the way I trade this, I want to always have a stop outside of the previous resistance. So in this case, we moved lower, forming a new bottom. Every pullback that occurs, now I want to this to be sure, this is actually the ultimate level to get out, of course. If you are more on the safe side, then you can identify after a couple of times, you can identify this as a stop level as well. An obvious take profit level would be within the range, because you know that once it comes back and it touches the lower side, there is potential to touch the support level a couple of times. But of course, when we also have this trend line nearby and resistance, that is oftentimes the ultimate move where we really get going. So this would have been the first move. Okay, wait a minute, this is getting a bit messy. Outside of this level, inside of this level, this would have been a setup. I don't know why it is so sensitive at the moment, but okay, we have our first trade over here. Then we move lower, we move into another area where, of course, you can hit this 1, 2, 3 times. It's all possible, but make sure you understand the whole idea of, you know, trading with the trend and all those things. So okay, we have ourselves another move. You can take it 1, 2, 3, 4 times. It's good with me. Then we have ourselves another scenario like this, and eventually we have one again in this area over here. Okay, so these are reasonable trading opportunities. We trade with trend lines, we trade with resistance levels. We all have those things on our charts that fit the criteria of a certain strategy, and that eventually is what we are looking at. Now here's the thing: if you trade with, let's say, 1,000 or something. If you don't have a serious trading account of 20k plus or something like that, you know, you're just a beginner to figure things out. You know, I see a lot of people that trade with just 1,000 or just 5,000 or something like that. So if you do that, if in that case, if you take on a trade like this within this channel, and this was one of the trades you were hunting for, if the market decided to turn around here for whatever reason, or you know, if you don't know that all this is going to happen when you take on your first trade. So let's assume your theory was wrong. Bang, you got stopped out and you had a loss. Now here's the thing: let's say 1,000. If 1,000 is what you are trading, how big of a loss can you take here? It doesn't matter how great this looks or whatever. You should have always a set loss. So on 1,000, make sure this is no more than just 20. You know, if you're wrong 3 times, you're down 60. You know, and on 1,000 down 60. You know, you see that 900 something. It's kind of annoying already. So never, how good it looks, never go in with, like, you know, if you have 1,000 and you have 2,000 once you take on your first trade, so you're doubled, then get out of it, take your money and never trade again, because that's ridiculous. If you are in that case, then you would have lost here for, this is almost a risk reward of 1 to 3. Yeah, you know, this is 2.9. So that means if this turned the other way around, you would have been down 300 from 1,000. Yes, you would have been up like 3 times the initial position you took on, but it doesn't matter if you always trade a full lot or a half lot or whatever. Calculate what you should be trading. That is what it is. Make sure you always lose, as a beginning trader especially, 1 to 2% maximum, because you're going to be wrong a couple of times. And if that's the case, make sure you're just down, you know, what's a 20? You know, what's 40 on 1,000? That's manageable. You know, your emotion don't start screwing with you. You can stay calm and go on for a next trade. You know, if you lost 20 here and you have a risk reward of almost 3, this would have been 60 up. You know, and this would have been 40 up. So now you would have been on 1,100. Again, if you take a trade over here with also a 3. That's another 60, so that's 1160, and this is a even bigger one, so it's another, let's say another 60. So it's a 2, what is it, 220. So to make 220 out of 1,000, that's really good. So if you would have taken these trades, and scenarios like this, I think you could have gotten into, well, don't know if you had this one, but this would have been a first trade to be taking with a profit. A second one was there with a profit. This here only offered you one trade, I think. And here again, it's just a sharp move up near the trend line, near support, turning resistance, bang, and there we go again. That is what's going on. So this is on the chart. Make sure you understand what I'm saying. Now let me switch to an Excel here for. So it's not fancy, it's not a Ferrari, this is just Excel, but this is really what it's about, people. This is a starting capital of 1,000. Now let's make this a 1,000. Everything shifts, as you can see. This is a calculated 2% loss. So on every trade you take, it's just 20 loss. The bigger your account gets, of course, the bigger risk you can take. So the bigger the losses can get, but your potential profits can get bigger as well. So every time if you trade a 1 to 2, it's not what we just saw, that was a 1 to 3, but let's say you're willing to take 2% loss, but a minimum of a 4% profit should be on the chart. Then in that case you make 40, you make 41, 42, etc., etc. And then by the time you've made you built your account from 1,000 to let's say 1,500, you're willing to take a loss of 30, and every trade you make, you are making twice as much. So if you're wrong, you erase the previous loss and you have still a profit. So it's 30 to 60, let's say like that. On the scenario I just showed you on the chart, then it's different. We have a 6%. And that is that 1 to 3 risk reward. Every trade you take, potential loss is 20. If it's a winner, and never do anything about a trade once it's running, because you're gonna sabotage the initial idea. Don't do that. 20% loss, 60% profit. Same thing goes here. Eventually, you still have the 30 loss, but you make almost a 90 in profit every time you take on a trade. So from here on out, you're almost at the level you're starting to make hundreds in every trade you make. By the time you make hundreds, probably you have 40 loss or something like that. 33 is much more reasonable when you look at the percentages. 1,500 is your account by then. It's up. That's the thing. You want to steadily build your account, and that is what's going on. Now, if you are really cherry picking and you always only take the best trades, you could have a loss of 20, probably have a profit of 80, and by the time you are at that 1,500 again, lesser trades are needed to make the same amount, of course, but a 30 loss and a 120 is 4 times as much every time you hit your take profits, and that should be in the core of it all what risk management is. Make sure you identify. You can analyze the whatever curse word I want to use here. You can analyze as much as you want on a chart. If you do not use these principles, please make a print screen of this. It's all here. This is what it is. Make for yourself these kind of boring Excel files where you put in your risks and your reward, all stuff like that. Every time you have a loser, of course, you need to make it up again. But look at trades as single trades. I put this in here. I think I used this in a previous video as well. Make sure that if you are of course this is the best thing to be looking at, but make sure it takes more time to actually hit your take profits, with more stress, with more doubt of your strategy, etc., etc. The time frame, this is not something that's happening on a 5-minute chart very often. I think it's more safe to do this on a bigger time frame. Your hit rate, if you are really looking for runners and big moves on a daily chart, yes, you get bigger profits. Your hit rate will be up, but it takes more time. And from a psychology part, I don't know, not everybody can handle it to put on a trade for 4 weeks. And some people want to get in and get out. There's a lot of psychology, but that's another subject. This is it for now. This is it for the current video. One more look at this beautiful Euro Swiss franc chart. I hope I really made my point. If not, this is the video I want to see. The comments. please let me know what you do not understand on risk management, because risk management is just as important as technical analysis. Without proper risk management, sooner or later you get that big loss, you start revenge trading, and everything will turn to the not in your favor. Let's put it like that. Okay. Thanks again for watching. Please like, subscribe, and comment below. Also share my videos, really appreciate it. And I'll see you in the next one. Looking forward to your questions to do new videos about. Bye bye.